In this video, we're going to walk through the numbers on the project behind me, which is a duplex that's on the market here in San Diego. We're going to take a look at the numbers and what it would look like if we were to add units into the back. We may or may not go after this one, but it's a good example of the type of deals that we go after. Let's take a look. It's no secret that San Diego is one of the best places to live in the country. Year-round, our weather is 70 degrees and sunny. We have a strong economy, the beach, the ocean, and then all the girls here have long legs and only wear bikinis, right? San Diego is amazing, but the real estate market here is changing, and this might be the best time to get into it since before COVID. Everyone knows that houses here are super expensive and rent is equally unaffordable. It's been competitive to buy a house here with everything on the MLS getting multiple offers, often above asking. But right now, because interest rates have gone up and everyone's scared about inflation in the economy, we're seeing increased inventory, longer time on market, and price reductions, which we haven't seen in years. So here are a few things that are less obvious. The reason our market has been so red hot is that we're still in a housing crisis. In the last 10 years, San Diego has produced enough housing units to satisfy about half the demand, and California is short 3.5 million homes. It's not Phoenix or Dallas, where the land outside the city is plentiful and flat, so you can just keep on building. We're surrounded by the Mexican border, the Pacific Ocean, Camp Pendleton to the north, and desert and mountains to the east. There's no room to build, but both the city and the state know this, so they've passed regulations that streamline the development of infill projects. And they've completely changed how we evaluate real estate projects here in San Diego. The new regulations make it faster and easier to develop apartments and ADUs in most areas. An ADU is an accessory dwelling unit that maxes out at about 1,200 square feet. They're self-contained apartments or granny flats or a garage conversion, but they can't be sold separate from the rest of the property. The San Diego Building Code was changed in late 2020 to allow almost anyone to hire a professional contractor to design and build an ADU so they could put one on their own property. And they're ministerially approved, which means your HOA or your neighbor can't stop you if you want to put one of these things in your backyard. Given the market uncertainties with rising rates and inflation, much of our competition has fled California, and they're missing the boat on this window of discounted pricing. Now, I don't know how long this sale on San Diego real estate will last, if it's going to be 6 months or 2 years. Eventually, the values will go back up. People who got into the market after the last correction made a ton of money, and I'm lining up investors who want to come along for that ride. So how did I even get into this in the first place? For almost 20 years after college, I was humming along in my career in corporate America. I was selling medical devices for a market leader, and for most of the decade that I worked at that company, it was my dream job. I had autonomy and was making a multiple six-figure income. Everything changed for me when the company was hit with a lawsuit, and we went through a major reorganization. I was promoted into a new job and handed a 20% pay cut. I thought of myself as this President's Club winning team leader who was devoted to the company, and they made me feel totally replaceable. After about 6 months into the new role, I couldn't take it anymore and decided I had to do something different. But just because I made up my mind to leave didn't mean I could actually do it. I still had responsibilities with a big house in San Diego, a wife, and 3 little kids. Life was expensive, and I only had so much financial runway before I'd have to go crawling back to that job. So first I started spending all of my free time getting educated. Even though I was mentally checked out, I stuck around and did the bare minimum until I'd really figured out my plan to leave. I got my first project in 2018, which was a distressed duplex that we turned into a triplex. I was still working my job, doing it on the side. We were on a time crunch because we were paying hard money interest rates, and the budget kept going up because we had to fire contractors who didn't do what they said they were going to do. Then COVID blew up our time frame to get our plans approved through the city development office, and to top it off with a shiny new eviction moratorium, our tenants stopped paying rent. There were many nights when I was up late worrying about the project. And I had my first investor in this deal. Was I gonna lose my money and his? Were we ever gonna finish? Was I gonna blow the deal, lose all of my money, get divorced, and on top of it, crawl back to my soul-crushing job in corporate America? Over the past few years, I've honed in my team and the kind of projects that we look for. I joined a real estate mastermind group to expand my network and my resources, gotten better at identifying projects that make sense, and dialed in the contractors that we work with. Now, in the fall of 2022, I'm looking for my 11th real estate project. So I have enough experience to know what I'm looking for, but we're still small enough so that you can access everybody on the team. We're looking for projects on underbuilt, multifamily lots in areas of San Diego with strong rental demand. These projects look like a small house or duplex on a big flat lot in a safe area that's close to public transit. So here's what I find interesting. Even though now anyone can buy a house and build an ADU in the backyard or convert their garage, it doesn't mean it's going to double the value of your house when you turn it into a duplex. Yes, the city's going to let you do it, and yes, you'll generate rental income from the project. But just because you can do it doesn't mean it's going to justify the cost of construction. Every ADU project is not created equal. Our model is to cash out investors at the end of the construction phase, which relies heavily on the appraisal. So before we even buy the project, we have to be able to identify the kind where additional ADUs or units will substantially increase the value of the property, and then only target that kind of project. When we do it right, the community gets better housing, our investors get double-digit returns and access to projects that they probably wouldn't even see otherwise, and I don't have to go back to my soul-crushing job in corporate America. Okay, so with all that as a backdrop, let's look at an actual deal. Let's start with the listing and see what we can tell from that. First off, it's got 2 pictures, which tells us something. It's a duplex, each side has 2 bedrooms and 1 bath. It's listed here at $675, but if we scroll down a little bit, we see that the price just dropped by over $100K. We're here in the 92105 zip code in central San Diego, which is the City Heights neighborhood. We like safe areas that are close to transportation, so we're about 3 blocks from this Starbucks, and then across the street is the trolley stop. The listing said it had some development potential to add units. We checked the zoning map and it is zoned multifamily, but it's also surrounded by all these other multifamily projects. And that's exactly what we would do here. We'd get rid of all the crap that's in this backyard, which is pretty big, and then we'd build from the ground up a few more units. We can see that on the block, we're surrounded by other multifamily projects, like the ones right next door that the neighbors have put up are perfect examples of what we could do. The existing front 2 units clearly need to be rehabbed. So during the process, we would go through, clean up the units, get renters inside so they're covering our carrying costs while we went through the permitting with the city. Here's the garage. They turned the 1-car garage into like a living space. It doesn't have any running water or plumbing. On another project, I converted a 1-car garage into a studio apartment that was about 200 square feet. It turned out pretty nice. We might do that on this one as well. It just kind of depends on how many units the city will let us have. The last piece that I'll touch on is a little bit of the rent analysis. There's tons of upside. Currently, both units are paying $985 a month. They're 2-bedroom, 1 bath. You can look at what other units that have probably been updated, what they're renting for. So if they're at $985 now, we could probably get close to $2,000 on each side. So tons of upside there on the rent. Realistically, I'd say we have about 3 exit strategies on this one. It'll depend on how much capital we're able to raise and also how many units the development office will approve. Exit strategy number 1 would be our most basic one. We're not just going to flip the property as is. We need to add some value. So what we would do is we'd rehab unit number 1, unit number 2 in the back, and then we'd convert the garage into a studio apartment. This would be our low cost option and would probably take us 6 to 8 months. For our second exit strategy, we would also rehab the front units, probably clean up the garage, but maybe not convert it to a studio, and then build 2 more units in the back where those trucks and all that garbage is in the backyard. So we'd have a total of 4 units on the property. In number 3, we're gonna end up with 11 units. We've got the front and the back house, which are going to be rehabbed. We're going to convert the studio. And then in the backyard, we're going to build 2 levels. Each one of those levels will have 4 375 square foot, 2-bedroom, 1-bath units that will maximize the new ADU regulations and put the biggest dent in the housing shortage here in San Diego. We'll have 10 units that are 2-bedroom, 1-bath and bringing in about $2,000 a month in rent. And then the garage studio will be renting out for about $1,000. Let's just be conservative and say we'll bring in $21,000 a month in rent. Then when we annualize the amount and take out our expenses, we come up with a net operating income of $163,800. To get the value of that, you divide the net operating income, the NOI, by the cap rate. We're going to use a 5 cap. And when you divide that up, you come with the total valuation of the project at almost $3.3 million. Not bad, right? And this is how those numbers would shake out. We've got $100,000 in the rehab costs for units 1 and 2, $50,000 turn the garage into a studio, $900,000 in construction costs. We're gonna have to buy the house and the purchase price is listed at $680,000. We've got about 20% buffer and our holding costs are $200,000. Our costs on the project add up to $1.73 million with an ARV of 3.27, costs of 1.73 total. We end up with a realistic profit of 1.5 million. It should take between 2 and 3 years and will require about $700,000 in capital. Part of this deal is carved out to identify new investors who would be fun to work with and who would behave on our projects. Is that you? I don't know. We're selective on who we work with because the wrong investor can torpedo a good deal. If you're interested and want to see more about what we do, go to our website and you can learn about all of our upcoming projects. Well, that's it for this one. Thanks for watching the video and we will see you on the next one.